I'm starting up the YouTube stream. All right, what up for you guys watching this on the YouTube replay? I appreciate y'all. We're going to be doing a quick stock portfolio update. Then we'll look at some stocks that I think are really interesting this week. So right now, the market's finally open. It's 8 o'clock. We're down 0.2%. Go look at the S&P 500, not moving much. I mean, Q's down 0.006. So and this is our main dividend growth portfolio. Every stock in here pays a dividend, and these are all like dividend growth companies like a Meta. We also have a Roth IRA with Robinhood. A Roth IRA is just a tax-free retirement account. We're pretty close to all-time, or no, we're at an all-time high in here. We just have three companies in here: InnoData, Main Street Capital, BRX, and then we also have our buy and hold portfolio. Where once I buy a stock in here, I try and just hold it forever. I try not to ever sell it. And yeah, these are all the stocks we got in here. We got some winners and some losers in here, like Perion Network. We're down 52% on them. And our most recent purchase in here is actually Coca-Cola Consolidated. I believe this is a company at a very attractive valuation. They trade at 17 times net income. You also get a nice dividend growth with this company. So yeah, that's my most recent purchase. And then, my friends, we have the risk on portfolio. So this is our Webull account. All right, had to turn on the fan there. So here, I'll just go to my biggest winners first. So, we got Dave, we got Disney, Robinhood. Robinhood did not get added into the S&P 500, and they're down 4%. Yo, what up, Ben? What do you think Hood will do? Yeah, look at Robinhood right here. They didn't get added into the S&P 500, so they're down 5%. They were rallying on anticipation of getting added into the S&P 500. But yeah, I think this is still going to be a winner in the long run. I'm not selling out of Robinhood. Unfortunately, I sold all my shares a while ago. Yo, it's Will. How's it going tonight? We're doing good, man. How about you? And yeah, if you guys got any stocks you want me to look at, let me know. We'll check them out. We also have some big losers in here like UiPath, Zoom, Enphase Energy, AMD, TAP. Our most recent purchase in here is actually ticker symbol FUTU. We just bought, you can kind of see the bias. Started my position just like 10 days ago. Bought a little more to them because they just have incredible earnings. Actually, check this out right here for FUTU. This is incredible. The revenue's at a record. Revenue's up 81%. The net income's up 109%. I mean, this is just incredible growth on FUTU. So that's why I've kind of been buying shares of them. But I want to go over some stocks that I think are going to be attractive buys this week. Yo, you can just call me Will, by the way. Oh, okay, bet. Good to see you, man. Yeah, thanks for showing up. Yeah, happy Sunday, guys. Hope you had a good day. So let's get into the watch list right here. And if you guys got any stocks you want me to look at in the chat, let me know. But the first stock I think is really attractive to buy is Uber stock right here. And look at the PE in the top middle. They're trading at 15 times net income. They're actually trading, like if we do a free cash flow multiple, it's even cheaper. Like if we go down here to the FCF, which stands for free cash flow, I mean, the free cash flow on Uber is up 65% year over year to 2.25 billion just in the most recent quarter. I mean, that was incredible. We can also see they're making net income every quarter as well. I mean, over a billion of net income every quarter now. So I really like Uber. They're printing free cash flow. They're still growing. Like a lot of people thought like they would stop growing after COVID, but look at this. I mean, revenue's at a record. It's up 26% from the previous year. Same with the delivery revenue, like Uber Eats, that's up 18% year over year. So, yo, what up, Jeff? What's the best stock for this week? Yo, I don't know. Yo, Aplo said ARJO. I've actually never heard of this stock. Wait, ARJO stock. I looked that one up. I can't find that one. Wait, ARJO. Did I type it in wrong? Yeah, I can't find that one, unfortunately. If you got another stock you want me to look at, though, let me know. Here's a cool one. So if you like a higher yielding dividend stock right here, this is a company they're a real estate company. They do triple net leases. They're probably one of my favorite higher yielding dividend stocks. If you look right here, you get a 5.44% dividend yield, and the payout ratio is only a 66%. So they actually have room to raise their dividend. And what this company does, they just do triple net leases. If you've heard of the Las Vegas Sphere, they own a lot of properties on the Las Vegas Strip, like the Las Vegas Sphere, the Luxor, like that Black Pyramid, the Caesar's Palace. They own the land under all of that. And yeah, their top tenants are like MGM Resorts, the Sphere, Caesar's Palace, a lot of those hotels. Let's see. Oh, someone said Tesla stock. Yo, this one, Elon's politics are starting to hurt the company. The stock fell like bad yesterday. We also heard like United Airlines are starting to like cancel their Starlink service. So Well, that's not really Tesla though, that's Starlink. But let's go look at Tesla. Here's the thing I don't like about Tesla. Here's the bad news. Look at their total vehicles delivered. It's actually down 13% from the previous year. So Tesla has a super high valuation, super high PE, and they kind of lost their growth. Look at this right here. The automotive business is down 15% year over year on Tesla. So that's kind of the bad news and why me personally, I'm just staying away from Tesla right now. I'm just not buying any shares. Their margins have also collapsed. I mean, if we look at their net income, it's down 70% year over year. So if you go to the net margin right here, it was only a 2.17% in the most recent quarter. Margins fell 67%. That used to be a double-digit margin business. Let's see. User59 said thoughts on Nvidia for the next 5 years. Yeah, I think Nvidia is just going to be a winner, man. They'll probably just keep on slowly going up. I don't see them like doubling anytime soon. Like but here's what I love about Nvidia. Here's the great news. Like here's their PC GPU market share, 18% GPU market share. Their automotive revenue keeps on growing. Here's why Nvidia actually deserves all the hype. I mean, this is incredible. The revenue's up 75% year over year. And it's not just that, the bottom line as well. The net income was up 26%. I mean, 18 billion. I mean, that's incredible. So as long as they can keep up this growth, I mean, incredible balance sheet. They print money. The cash from operations was up 80% year over year. I mean, that is unbelievable. And NVIDIA is such a big company that they own some individual companies. Like, here's NVIDIA's most recent purchases. They've been buying CoreWeave. They own like 8% of CoreWeave. They own APLD, which just went to a partnership with CoreWeave, ARM, Nebius, RX, WeRide. I'd stay away from that one. But yeah, let's keep going on here. Jonas said, keep CRDF on your watch lists. Let's check that one out. CRDF. So this is Cardiff Oncology. Huh. I've never heard of this company before. If you look in the top right, this is a very small company. They're only worth 250 million. So very, very small company. Let's go look at the financials though. We fundamentally analyze this one. Yeah, look at this. I can see why they're not worth much. The revenue was 100,000. And it's down 46% year over year. So that's the bad news about revenue. And the net income, oh, dang, they're losing 10 to 15 million a quarter. The whole company's worth 250 million. They can't afford that. Does Webull show free cash flow? No, Webull does not. I am not on Webull right now. But this app, if you want to get this app, it's in the link tree in my bio, the third link there. You can, there's a FCF right here. That's what free cash, oops. Hold on, it got to scroll down. There we go. Yeah, FCF, that's what free cash flow stands for. They got all these cool metrics. So yeah. Check out SUNS. What's this one? Sunrise Realty. Okay, so this is another real estate company. We looked at Vici Properties. Yeah, hey, Ticker, if you want to get this app, it's actually a brokerage. It's in the link tree in my bio. It's the third link there if you want to get it. But yeah, this company doesn't have much revenue. Like, look, the revenue is only 5 million, but it is up 150% year over year, and they made net income off that. That's a crazy margin if that's real. That was real, yeah. So 5 million revenue, 3 million in net income. So, but it's just such a small company right now. I would be careful with this one. Like, the revenue is only 5 million. I also see they just IPO'd. So that's an interesting one. I got to do some more research on that one. There's just not too much history. I'll actually add them to the watch list. So let's keep going here. AZN. Let's check it out. AZN. AstraZeneca. Okay. Haven't heard of this one either. Yo, what do you think of a stock called CCK? Yo, Mac. So sorry. We'll check that one out after this. How's it going, Mac? Good to see you. So AstraZeneca, $225 billion company. This is a huge company, actually. Jeez. Do they pay a dividend? They do. You get a 2% dividend with this company. They're in pharmaceuticals. So they're in the pharmaceutical. Oops. Well, there goes the live stream. That's all right. So this is a pharmaceuticals company, and look at that. The pharmaceuticals revenue is at a new record in the most recent quarter. So that's the good news. Let's see, are they profitable? Yeah, they made 3 billion of net income just in the most recent quarter. So I can see why this company is pretty much at all-time highs right now. Give me 1 second here, and we'll get right back to the stocks. I gotta log in. Yeah, TikTok just took down my live stream per normal. All right, we're back. Oh my gosh, thank you. All right, hold on. I gotta go just click the Gmail app. Give me just 30 seconds, actually less than that. And yo, if you got any stocks you want to look at in the YouTube chat, I will check out all of them. I do appreciate it. All right, there we go. So we are back. So yeah, AZN, well, whoever commented that is no longer watching. So rip. So let's look at CCK right here. Ticker symbol CCK. So this is Crown Holdings. I haven't heard of this one either, but look at that. They're at a new 52-week high right now. So they've had a nice little rally the past year here. Let's see. They do have a dividend. They have a 1% dividend, which isn't too bad. 1% yield. Let's see. So metal beverage cans and ends. Huh. So it looks like they're in the bottling or beverage industry. Revenue's up 5% year over year. Transit packaging, metal foods, cans. So, that's interesting. That seems niche. Like they might just sell a commodity. Yeah, look at that. They're pretty much making 300 million of net income every quarter. Revenue's not growing too much. Revenue's up 3% year over year, but still, I can see why you like that one. They're making net income every quarter. They pay a dividend as well. So let me also go check on how the market's doing real quick. We are down 0.03%. The market opened 30 minutes ago. Here are all the stocks that we own in here. This is our dividend growth portfolio. Like we got Meta, Google. Actually, let me see what's happening. Nvidia's up 0.5%. Tesla. Yeah, nothing too crazy right now. No real news. We can also check out our risk on portfolio. What's up in here? Dave, Toast, UiPath is up. And the overnight, what's down? So yeah, Robinhood is down 4%. Robinhood, they did not get added into the S&P 500, and so Robinhood fell on that news, which was unfortunate. One stock I really like, though, I think is at an attractive valuation, is Reddit. Yeah, hey, Abdullah. Yeah, we'll go back to AZN. Yeah, my TikTok stream got taken down. Or the whole account got banned. So I'll check out your stock again. They were a pharmaceutical one. But let me look at Reddit real quick. So here's what I love about Reddit. A lot of people just think they're a meme stock, but this balance sheet's incredible. Reddit has no debt whatsoever. Reddit is a completely debt-free company. I mean, look at that monster balance sheet. And on top of that, I mean, what other company is growing like this? The revenue is up 61% from the previous year. Reddit has seen some phenomenal growth, and that's why I like them. I think their fair value is probably closer to like $200 on that company. So yeah, let's go back to AZN stock right here. My fault. I'm mad at TikTok. Oh well, so yeah, this is a pharmaceutical company. Their pharmaceutical revenue just hit an all-time high, but look at the net income. They just made $3 billion of net income just in the most recent quarter, and it grew 33% from the previous year when the revenue was only up 7%. So what does that mean? That means they expanded their net margin. Their net margin grew 25% from the previous year. So that's the great news about ticker symbol AZN, and a 2% dividend yield on them. Nice margin expansion. Oh, yo, Salesforce stock. Yeah, dude, I love Salesforce right here. So look at how diversified their revenue stream is. This is what's so cool about Salesforce. 25% from service, then sales, platform, and other, marketing and commerce. Well, look at this. We'll click on just the services. If we go to on an annual basis, services revenue, literal all-time high record for the full year or fiscal year 2025. We can look at their sales revenue, looks the same, all-time high. Platform and other, all-time high. You kind of get the point here. I love the diversification and growth of Salesforce. They also print free cash flow. Literally just in the most recent quarter, Salesforce made $6.3 billion of free cash flow. I mean, that's ridiculous. The net income's really strong as well. $1.5 billion plus a net income a quarter, and it's expected to keep on growing. There's just a high margin software play. And I think they just started a dividend as well. Check that out. Get a 0.6% dividend yield with Salesforce. So yeah, they're a cool one. GE and GEV have been beast for me over the last year. Yeah, dude, I love GE Aerospace. I mean, this is like they have like pretty much a monopoly on like repairing and servicing commercial airplane engines. So GE Aerospace stock is literally at an all-time high. They're split off when they spun off into 3 companies. It was pretty genius. And yeah, if you guys got any stocks you want to look at, let me know. I'm reading both the YouTube and the TikTok chat. So yeah, and so this is right here is our buy and hold portfolio. Again, don't listen to me. I'm not an expert. This isn't financial advice. You could lose a lot of money. Like, look at this stock right here. Even though I dollar cost average into the stock, look at that. I was buying this stock every other day. Like, I just kept on buying into them. The stock could still just go to zero. So always do your own research. This ain't financial advice. And yeah. So this one's in Nancy Pelosi's portfolio. Yeah, so if you go to Nancy Pelosi's portfolio right here, yeah. So here's Nancy Pelosi's portfolio. She's the genius stock picker. Her latest trade Here were some of them. She purchased. Well, these were some of the options, but here are the stocks that she actually purchased. She bought some interactive brokers, PayPal, Comcast, Disney. But yeah, someone said PayPal stock. This is kind of like that payment processor. Or you just like they also own Venmo. If you've heard of Venmo before, PayPal also owns that. And the stock hasn't done too good. Look at the PE though. The PE is very fair, I think, 16 times net income. So, very low valuation and they just make a lot of net income. They're literally making over $1 billion of net income every single quarter, and they just trade at 15 times that net income. So PayPal is one I do really like. The free cash flow is just as strong. Free cash flow did fall 45% year over year, though. But I don't think PayPal deserves to be trading at 16 times net income. I mean, that just seems like a very low. Yo, what up, Juan? He said, I've been watching a speculative stock called WVE. If you're, let's check it out. Yeah, thanks for showing up to the YouTube stream. Let's see, WVE. So Wave Life Sciences. So let's see. So yeah, they're a $1 billion company. So not that big, $1 billion, but still not that bad. Let's see. Are they making net income? So no. Last quarter they did though. Last quarter they had 83 million of revenue. Where did that come from? Did they sell off an asset or was that organic? That looks like it was organic. So they're deleveraging their balance sheet, which is great news. Yeah, they've really deleveraged since last year. I can't believe they made 30 million that one quarter, but they went back to losing net income. So I would like to see this company consistently make some net income. That's probably, and once they do that, this stock will probably rocket higher. But that's the risk. Will it do that? No one knows. So that one could be an interesting swing trade. I will say. Someone said you were the liquidity. I'm not sure what that means. But yeah, here's our portfolio right here. We also, we have our Robinhood account right here. We have a Roth IRA. Roth IRA, we just hit an all-time high. InnoData, this has been the hidden gem performer right here. And I should have bought more of this company, of course. We only own 9 shares of this company, but here's what I really like about this stock right here. This is InnoData. I don't hear anyone else talking about them. 5 of the Magnificent 7. So I think it's Google, Amazon, Meta, Nvidia, and Microsoft are all customers. All 5 of those companies are customers of InnoData. And check out the growth right here. This is why I own the company. I mean, this is incredible growth. This is what I like to look for in a stock. The revenue's doing great. The revenue's up 160% from the previous year. I mean, that's some incredible growth. And also, they're free cash flow positive. They're net income positive. They have no net debt. So InnoData is one I really like. Do you ever talk about index funds? Yeah, we like to look at ETFs. So let's see. SHLD. Is this let's see. Wait, SHLD. So here we go. Global X Defense ETF. Yeah, the defense, aerospace and defense sector has been doing really good. Look at that. This ETF is at an all-time high. No other ETF has been performing this good. Let's go check that out. I'm guessing GE Aerospace is in here. I'm actually not seeing it. BAE Systems is their largest holding. Then Rain Metal. I've heard a lot of good stuff about that stock. Lockheed Martin. So yeah, Palantir. Yeah, this is a government contract defense play. Palantir, a lot of the revenue comes from the government. A lot of police stations use Palantir. What's this company? Thales. Oh, I can't click on it. Hanwha Aerospace. Anyway, SHLD ETF has done great. Congrats if you own them. Let's see. Muan said OPFI. Let's see. OpFi stock. So I've heard of this one before. Look at that. They've actually done pretty good recently. Let's check out them. So they're a small company still, so there probably could be more upside potential. They're only a $1.3 billion company. Let's see their revenue right here. Look at that. Actually, this is great news. They're making net income every quarter, and it's real. The net income doubled from the previous year when the revenue was only up 10%. I would like to see the revenue grow a little bit more, but that net income expansion, that margin expansion is incredible. So yeah, this is a super profitable company. They don't pay a dividend, but I love how profitable they are. Yeah, they're probably trading at like 20 times forward net income or something. Yo, what up, Andrew? He said MDP. What's this one? Is this the Canadian company you're talking about? Medex Pharmaceuticals. So this one looks pretty risky. $91 million company. Very small market cap on this one. So I would just stay away from this one. It could be a fun little swing trade. But let's see. Revenue of 30 million. They are making net. Actually, that's good news. So I do. Out of all the risky stocks, I would buy one that's making net income. This is a net income positive company. There's probably not too high of a chance of this company going to zero, going bankrupt. So yeah, I love that they're making net income every quarter, and they're really making net income. And the revenue just grew 20%. So this one's actually not too terrible. I want to see them, consistently make net income, and they have the past year. Let's see how they grow it. So that's an interesting one. Thoughts on Tesla today. So TSLA. So the thing is, Elon's politics. I don't have the popular opinion. Let's go see how Tesla's doing in the overnight market. So Tesla is up 0.41%. They're at nearly $300 right now. Here's why I just stay away from Tesla. I just don't buy the stock, and I'm not trying to be bearish on them. Here's just why I don't buy them. I just buy other stocks. They kind of lost their growth, and they traded this high PE ratio. Look at that. Tesla trades at 168 times net income. That's okay if there's a lot of growth behind the company. But look at what Tesla just announced. Their total vehicles delivered are actually down 13% year over year, deliveries by model. Just look at the automotive revenue right here, which is 85% of their business. It's actually down 15% year over year. So I just be careful. Oh yeah, and the net margins have collapsed. So like financially speaking, Tesla's doing terrible, but they're the robo-taxi, all the robots in the future is going to be the reason they go up. So yeah. What does PE mean? The PE is just the price to net income. So PE is just price to earnings ratio. So price to net income plus any stock buybacks or dilution. All right, let's see. Another commercial broadcast. Oh, wait, I'm sorry, Mac. I don't know what all that's about. You have to check NU Bank. Yo, what up? Good to see you, Nathan. Yeah, so this right here, you're right, it's actually a crypto bank out of South America. So, they're actually a crypto bank, and down there in South America where their currency is not very good, that's actually where crypto's most popular. So let's actually see. Look at this net income. Here's why I love this stock. Even Warren Buffett or Berkshire Hathaway, which Warren Buffett is like the owner leader of that, he and his team bought some NU stock in there. And look at the net income. I can see why he did it. They're printing money. Literally, net income's up 50% year over year. They're making over $2 billion a year. What's the market cap on this? So they're trading at 27 times net income. That seems pretty fair to me. So, yeah, look at that. Oh yeah. So as I said, look at that. 92% of the revenue actually comes from Brazil, and that's where crypto is really popular. So then there's Mexico. So yeah, just there you go. Hopefully that was helpful. Can't be mad at you for not buying Tesla. It's definitely up and down. Yeah, I just buy other companies. And they don't really pay a dividend. I love dividend paying stocks. Like I love companies that pay really low dividends, but also have really low payout ratios, like Coca-Cola Consolidated. This isn't the main Coca-Cola. This is a bottling company, but they have a 0.5% yield and only a 5% payout ratio. If they go up to the normal payout ratio of like a 30%, like McDonald's, McDonald's has a 60% payout ratio. This company would have, a crazy like 4% yield. They just choose not to and instead choose to do stock buybacks and stuff like that. Anyway, yeah, here's our dividend growth portfolio. We do actually own some McDonald's, and we have a dividend coming in from them. $23 dividend from McDonald's. So I'll take that. Go buy some McChickens or something. Let's see. What stocks are you down on, but you're not going to dump? Oh, this one right here, Perion Network. I'm down 52% on that one. I'm not selling them. And the other two, these I'm not selling either. Zoom, I'm down bad on Zoom. Like 40% of their market cap is their cash on hand, and they have no debt. UiPath is another debt-free one with a lot of cash on hand. The CEO quit out of nowhere. Stock tanked after that, so it happened right here. They didn't report earnings. The CEO quit, and anyway, UiPath. I'm just not selling out of them. But yeah, AMD, all these. Anyway, let's keep going over here. I'm slightly stressed. I got 65 on shorts, but market. Yo, what up, Grog? How's it going, man? Buffett did step down, but good. Yeah, Warren Buffett dmoet step down from Berkshire Hathaway. So let's see, LVMH. So I think that's LVMUY stock. So yeah, this is Louis Vuitton, Moet, Hennessy. So I love this company probably more than Nike. What do you think about Frostmore Clean Energy? Yo, Dr. Doom, give me the ticker symbol for that stock, and I'll check it out for you. But Louis Vuitton, look at how diversified their revenue streams are. 50% of it comes from fashion and leather goods, like their bags and stuff. Then they're in watches and jewelry, high margin businesses, perfumes, cosmetics, spirits. So that's what I like about Louis Vuitton. A lot of the high luxury stocks have been getting really hurt, though. Their net income is down 18% from the previous year. So net income is going down. That's why the stock price is going down as well. But I like that one just as for the brand value. It was MDB. Oh, let's check out MongoDB. I think this is like a cybersecurity software name. Let's check them out though. They don't pay a dividend. So let's see. MongoDB Atlas related. Well, look at that growth. That's really impressive. This is what I look for. The revenue's up 26% year over year. That's some very solid growth. And other subscription, how's that revenue doing? It's up 10%. Not bad. Are they profitable? Well, they just made 100 million of free cash flow in the most recent quarter. They did lose net income, but they're trending super close to profitability. Yeah, they used to lose a lot more money, and now they made net income last quarter. So probably in a year or two, they'll be making net income every quarter. So MongoDB's cool, but the stock hasn't been doing too good. Yo, what up, Saw Rose? He said UNH. Yeah, dude, United Health Group has been getting wrecked recently. But I think the valuation is pretty fair on this one. They just rose their dividend by 5%. That's a good confidence sign that they trust. Like, look at this right here. The PE, they're trading at 12 times net income. Lowest PE ever. I mean, lower than it was during the 2020 crash. And you get a nice yield on this company too. Check that out. A 2.8% dividend yield. But and we're also a customer. I mean, we use OptumRx. Look at the OptumRx business. It's actually growing pretty nicely. But the reason the stock has gone down so much is because the future growth is uncertain, or they're actually expected to probably, definitely decline in sales. That's why the PE just collapsed. But I think the risk to reward has actually looked very fair on them. FMST stock. What's this one? So foremost clean energy. Check that out. This might be a nuclear energy stock or something. They're still a very small market cap, $50 million company. They're a Canadian stock. So we'll switch the revenue to US dollars. Do they have any revenue? Yes or no? This is a revenue-less startup. They have no revenue right now, which isn't the end of the world. I'd like to see a timeline for when they can finally make revenue. Really good balance sheet, but the risk reward probably doesn't look too good on this one because it's a revenue-less company and it's tough to buy them after they've run up so much. But congrats if you own them. Looks like they've done great. You paid $3.47. Wait, let me go back to that real quick. You got in at $3. Oh, dang, you're up like 20% plus. Nice, man. Let's see. Someone said, yo, what up, Grog? Randy said TTD. So this is the trade desk right here. This is an advertising company. And one of the reasons the stock has fallen so much is because Netflix is no longer using the trade desk to find advertisers. Netflix just does it themselves now. And that's kind of why the stock fell so much on that day. But still, the right now financials are incredible on the trade desk as an advertising company. The revenue is up 25% and the net income is up 60%. That means they're growing their net margins at a very nice rate. They grew their net margin 27% year over year. So Trade Desk, I actually still like this one. They're making net income every quarter. Very profitable company. And they're an advertising play. Yo, what up, Berkey? Yo, give me an example of one of those. I don't know. Buy that kind of stock. I don't know if I can say that, but let me know. The Smith & Wesson. Is that SWBI? I think. Obscura said AT&T. Yeah, dude, AT&T has done surprisingly well. I mean, if we zoom out on the monthly, they're obviously down from 1999, but I just mean like the past year here, they've seen a solid recovery. They were just at $18 and now they're at 28. And, for a boring dividend stock, that's very nice. And look at the yield here. You get a 4% dividend with AT&T. Not bad. This is a nice dividend play. You get 1% of your money back every quarter. PE is a 17. And yeah, they pretty much just make every quarter 4 or 5 billion of net income every quarter. That's the good news. Yeah, we can see the operating profit. The net income was only 145 million. That was a one-time adjustment. They always make normally 6 billion of net income a quarter. So yeah, AT&T is cool. TTD versus APP. As much as you like dividends, how come you do not seem to be on the SCHD? I just don't own any SCHD. This one has, this is going to sound crazy. It has too high of a yield for me right now. I just don't need a 4% yielding asset. And the SCHD has kind of underperformed the market. And that's just because of its top holdings. Verizon, Lockheed Martin, Altria, Conoco, the Chevron, Amgen, these won't really outperform the market in the long run, but you get a great 4% dividend with this ETF right here. I have no complaints about it. This would be something I'll probably buy when I'm older because I'm just reinvesting on my dividends right now. I don't need any income, but I still I know I want that one day, so I buy the super low yielding dividend stock. Someone said AppLovin. Yo, we'll look at ITRN after this. We'll check that one out. Um, but here's AppLovin. This is a huge advertising company. This is incredible, the growth here, and this is why I think they deserve all the stock price appreciation. Look at this advertising revenue right here. I mean, this is so impressive. I mean, this is what I like to look for. The advertising revenue is up 71% from the previous year. That's just so impressive. Apps, well, that's down 14. That doesn't matter because that's a small segment of business. But yeah, if we look at the FCF, which is free cash flow, they made 830 million of free cash flow just in the most recent quarter. The net income was 600 million. So this is an extremely profitable company. I love them. So yeah, AppLovin's cool. Um, oh, you're talking about a real one. Okay, what's up, Vert? I do not own any ETFs right now. I'm a stock picker. I like individually picking stocks, but um, I used to own like QQQM, VOO. I love ETFs though. Let's see. Value play CCJ. Oh, then we'll look at, oh, my fault. ITRN after this. So here's Cameco. Oh, so Cameco, this is the uranium company, Canadian uranium company. The US is starting to buy a lot of Canadian uranium instead of Russian uranium. And that's really helping out this company. And check this out, like half the revenue comes just from uranium, which is pretty cool. So yeah, that's the good news about CCJ. Uranium is what powers nuclear energy reactors. Yo, it's all good, Mac. What's up? And what up? Brijesh. I'm probably saying your name wrong. Brijesh Patel. Good to see you, dude. Um, oh wait, let's see. ITRN. Um, I use SHD in a Roth so the dividends aren't taxed. Hey, that's a smart idea. I own a lot of high yielding stocks in my Roth IRA as well. Actually, I own stocks in my Roth IRA that yield more than that. Like Main Street Capital, if anyone's heard of this stock before, they actually pay you a monthly dividend. And because I only own $500, but that $500 pays me $2.50 every month, which is pretty cool. And they trade at like 9 times net income. They're a BDC, business development company. Anyway, let's keep going here. So this is Ichiran. Ichiran. I can't even pronounce that word. Location and control. So let's go check them out. So wow, really good yield here, 4.4% yield. Uh, let's see, telematic services. So the revenue is up 2% year over year. You know, nothing crazy. Telematic products is up 1%. So they're not really growing that much. So yeah, revenue is up 1.6%, but the net income is actually up 11. So that actually means they're growing their net margin. That is good news. That's probably why the stock is actually reacting pretty well. But the sales growth is a little slow there. Um, but I like the dividend. They just rose their dividend in 2024. They nearly doubled. No, they over doubled their dividend from the previous year. So that's interesting. OP. Oh yeah, if we go to our debt-free watch list right here. So if we go to this is my watch list right here of every stock with no debt. So every stock in here has no debt. One of them that we have in here is Opera. Has anyone heard of that Opera GX browser? Keep on getting ads for it and stuff. But anyway, they're publicly traded. Low valuation on this company at 20 times PE. And look at the net income. They're making net income every quarter, 20, 30 million. They are in search advertising revenue. Actually, let me see if I can find that exactly for you. Oops, let me not scroll down that far. Oh, is it not going to show me? Oh, yeah, so look at that. 57% of the revenue comes from advertising, and then there's search revenue. So, yeah, just interesting companies. Sometimes they do special dividends. Yeah, Opera GX browser is interesting. Lulu, yo. Oh, well, I want to look at HYG as well. My fault there. I wanted to look at that one. And, yo, Adrian, good to see you, dude. I love your quantum little community. So, oh yeah, look at Lululemon right here. Lululemon, that apparel company, just reported earnings and they're down 19% year over year. So the earnings were good. Or I'll show you the earnings. They triple met on earnings. They met on revenue, slightly beat on net income, slightly beat on EBITDA. But the guidance was bad. They gave bad guidance in the future, slowing growth. And I don't know if that deserves to send the stock down 19%. I don't know. We can see their number of stores. It only grew by 3. Number of stores went from 676 to 767 to 770. So that's interesting. But yeah, Lululemon, they're an apparel company. I'm staying away from them. I just don't love apparel companies. You know, they just sell a commodity. Wait, I want HYG. So was that the ETF? So here's HYG. So high yield corporate bond ETF. So yeah, they just own a lot of corporate bonds. These are basically IOUs from random publicly traded stocks like Hub International. I know that stock. So yeah, they just own a bunch of corporate bonds. Best weekly dividend stock. Yo, I don't weekly dividend. That's too frequent. That's without having into. I love opera. Bye bye bye. Kenny said I bought S ticker symbol S on the dip at 17. Where's the exit? So where's the exit? I don't know. Let's check out Sentinel One. There's only a few stocks with one letter ticker symbols. There's only like 20 of them, and this is one of them. Ooh, this is the bad news. This might be actually, yeah, look at that. If you're wondering, like, hey, why is the stock kind of at all time lows since its IPO? Well, look at these net income losses. The losses kind of just got worse. They lost 200 million, and that's not good. But the revenue growth is there. Revenue's up 22%. So that's why it's actually not too terrible. Yeah, they're losing a lot of money, but the revenue growth is there without free cash flow. Hey, they made free cash flow. That means they have stock based comp. Yeah, the revenue's up 22. Not bad. Um, let's see. Grab. Oh, Grab. This is a really cool company right here. So this is Grab Holdings. We'll look at these stocks as well. Best payments company. Okay, here's Grab Holdings. This is the Uber for everywhere else except the United States. So check this out. If we They do exactly what Uber does, but look at where the revenue comes from. It's all these other countries. Notice the US and Canada aren't on here. So that's what's kind of cool about this company right here. And they attracted so much attention that Uber literally bought the company. If we go to the shareholders, Uber is literally the largest holding. So if you own any Uber stock, you technically own some of Grab Holdings, which is pretty interesting. So the ADYEY, best payments company. Let's see. So $61 billion company. Yeah, that's a really big market cap. They don't pay a dividend. Oh, so this is a European company. So we'll switch the revenue to US dollars. So let's see. Uh, so this is from 2018. For some reason, maybe because they're European, I don't have their most recent data. So I do apologize. I can't really look at the financials for you, but looks like the stock's done great. It's at a new 52-week high. Lululemon's a huge value play after the tariffs. Oh yeah, that's a good point. Nathan, y'all ETF is pretty. Yo, what up, Pocket? Wait, ticker symbol YALL. God bless America ETF. Huh. I've never heard of this one, but look at that. This ETF is at an all-time high. This is a pretty interesting one. Hey, Adam56, if you want to get this app that I'm on right here, it's in the link tree in my bio. It's the third link there. It's actually a brokerage, but it's an app. But anyway, oh yeah, look at these holdings right here. It's NVIDIA, Tesla, Broadcom, Boeing, Costco, Charles Schwab. This is an interesting ETF. These are some niche top holdings. They even got Marathon Holdings, the Bitcoin mining company in there. So diversified in a lot of sectors. Let's see what their sectors. So 22% tech, industrial, consumer, healthcare. So that's interesting. And the thing's at an all-time high. So congrats. CRWD, yo, CrowdStrike, yo, Nancy Pelosi owns some of that one. Let's go back to her portfolio. So where is it? Nancy Pelosi stocks. She actually just bought some CrowdStrike as well. So yeah, CrowdStrike is now 4% of her portfolio. This is a cybersecurity company. I think like literally 40% of the S&P 500 companies use CrowdStrike, which is pretty cool. So yeah, in cybersecurity, we're always going to need that from now on in the future with AI getting better, easier to hack and stuff. But anyway, the revenue growth is really strong here. They're making over $1 billion of revenue a quarter now. The net income is negative because of their outage lawsuit losses are still hurting them. That's why the stock fell so much right here. They had an outage, that outage literally caused all the planes in the US to land for like an hour. I still remember it on the news. It was huge. It literally set the stock down like in half. There was a CrowdStrike update that wasn't right and it crashed literally all the. Anyway, let's keep going here. While I was stuck in the airport because of CrowdStrike, I should have been buying it. Oh, hey, what up, Kadu? Yeah, you know what I'm talking about. Good to see you, man. Happy Sunday. Hope y'all had a good weekend. So Matthew said GRRR. Oh, yo, then we'll look at Hims and Hers and DocuSign, Chewy. I want to get to all these stocks right here. So here's Gorilla Technology. They're up 18% the most recent day. Look at that. That's great news. I wonder if there was any specific news here. Here's the thing about this company, though, why I'm just staying away for right now. Wait, this is from 2023. We don't even have their most recent revenue data. They just don't have. That's weird. You know what? Let me go to Webull And if it's not on Webull, then the company just hasn't reported it properly. So GRRR Technologies, so $450 million company. So yeah, very small market cap. Uh, yeah, this is from 2023. This doesn't have no app has the most recent data, so that's weird. I wish I could give you thoughts on them. Um, all right. Hims and hers. So this, a lot of people think this one's a meme stock. This is no meme. This is an incredible, profitable, growing company that I want some exposure to. So check this out right here. This is the most impressive thing about Hims. It's just the growth. The revenue is more than doubled from the previous year. The revenue is up 110%. I mean, that's just so impressive. And also the profits. They're making 200 million plus of free cash flow a year. The net income's even better, or the same. They're making like 200 million in net income. They have no debt, and it's just growing. This is just a growing company. The market's looking for growth. So yeah, Chewy. Oh, then we'll look at DocuSign. What up, Brand Echo? Good to see you, man. We'll look at DocuSign after this. Wow, look at Chewy. That's really good growth. Look at that. They're at a new 52-week high right now. I believe this is the company that just delivers you pet food. And let's go check this out, like the free cash flow. Yeah, look at the free cash flow. It's doubled from the previous year. The free cash flow is up 133% year over year. So incredible growth of the free cash flow. The net income, it looks like it's a little choppy. That was a one-time adjustment. Anyway, I could see why the stock's doing so good. The free cash flow kind of just doubled. So is this the same thing with mutual fund? Huh, I'm not sure what we're talking about there. Um, what up? How's it going, man? Oh yeah, let's go to DocuSign now. So if we go to our here's our portfolio, one of our portfolios. One of our bigger losers recently has been DocuSign. We're still up like 70% on them, but look at them in the most recent day. They fell 19% on bad guidance. So the actual earnings they triple beat by a huge chunk. They look at the orange line. The blue line's what they reported. They beat like crazy on revenue, beat like crazy on net income, and beat like crazy on their EBITDA. But the stock still fell 19%. Why? Because of the bad guidance. When companies give bad guidance, then the stock will fall. And they projected only 4% billings growth. And that's why the stock fell 19%. Only 4% growth, it's not great. Um, we'll look at APLD and CEG. So yeah, what up, Joseph? We'll look at RELY. Someone said, what's your CEG dividend? Yeah, let's check that out. So Constellation Energy, this is the largest nuclear energy stock. It's already, hopefully I don't show anything here I'm not supposed to show. Dividends. So yeah, we got a $5.82 payment from CEG right there. Yeah, here's some of our more recent dividends. Main Street Capital, $2.50 dividend. McDonald's, 23 coming in from McDonald's. So I love dividends. I'm in Hims. Hey, nice, Rando. So let's look at APLD. Yeah, what up, BOBE? So he said APLD stock. So this company just went into a huge partnership with CoreWeave. And on that CoreWeave partnership, the stock literally gapped up like crazy. It went from, $6 to 14. So the stock nearly doubled on that news. Stock is nearly at an all-time high. And here's what I love about APLD. It's this cloud service business growth. The cloud service business is up 220% from the previous year. I mean, this is incredible growth, and it's expected to just keep on growing even more from here after their new partnership. So this is just a really nice growth company. Actually, let's go look at NVIDIA's portfolio because where's NVIDIA? So NVIDIA, their largest holding is CoreWeave. They got a steal on CoreWeave with right now's price, and they own some of APLD. And shocker, two companies NVIDIA owns, CoreWeave and APLD, go into a huge partnership. So that's what I like about them. I just got a decent paycheck, and I'm contemplating if I should buy TTWO or stick into SCHD. Yeah, that's a good one. I'd probably pick SCHG. What up, Joseph? He said RELY. So let's check this one out. Remitly Global. It's hard to say that word for some reason. Remitly Global. Okay, let's check them out. $4.5 billion company. Let's see. Are they profitable? So the revenue, nice growth. Revenue is up 34% from the previous year. Look at that. They just made net income. They used to lose net income every quarter. And in the most recent quarter, they finally made net income, 11 million. And that was real. That was real net income. That's great news. Actually, this stock should probably be up more. Maybe they gave bad guidance or something. Really strong balance sheet. Cash from operations is strong. Actually, I really like RELY. I wonder why they haven't gone up more. The financials are pretty strong there. All right, let's see. Show your portfolio. Yo, what up, Mustafi? Hey, yeah. Mustafa, if you go to my YouTube channel is called Nathan Robert. It's also the first link in the link tree in my bio. You can see my entire stock portfolio update. I literally today, a couple hours ago, I did a whole entire stock portfolio update of my whole $55,000 stock portfolio. So if you want to help me out, like just support me, the only way to support me is just subscribe to my YouTube channel. Go watch that video I made today on YouTube. You can see every stock that I own, why I bought it, what are my big winners, my big losers the past month. So anyway, let's keep going here at some stock analysis. So, yo, what up, Versus Jobs? How's it going? Love the content. He said, hey, I appreciate you, man. Thank you. Yo, I'm gonna give you a follow for the kind words. I appreciate that. Let's see here. Thoughts on CYN. So, I haven't heard of this company before. Ooh, actually, wait. I just realized this is my second account. I'm gonna have to unfollow you. I feel so bad. My okay. See, yeah, watch out for people impersonating me. I'll never follow you. And there's a lot of anyway. This company looks very risky. Someone said CYN. If you look in the top right, you see market cap. This whole company is worth 8.4 million. This is an extremely small company. The stock's at an all-time low. So I would absolutely stay away from this company. Remember, the whole company's worth 8 million, and they lost 8 million of net income just in the most recent quarter. So yeah, that could be maybe a fun swing trade, but I would not trust that one. What app to use to get high dividends? What app? Hey, if you want to get this app, oh yeah, hey, if you this app I'm using, if you want to get it, it's actually a brokerage. If you go to the link tree in my bio, it's the third link there. It's called Mumu. And I have a tutorial on how to use this app on there as well in the link tree in my bio. I go over all my favorite features and tools. So anyway, here's Rocket Lab right here. This is a space contract company. They have literally a backlog of like $1.3 billion of orders that they haven't fulfilled yet. So check this out. This is what I love about Rocket Lab, the growth. The revenue's up 45% from the previous year. So that's the great news about Rocket Lab. They also just acquired a company, like literally in the past couple of days or probably weeks. They just acquired a new company, and that's expected to just supercharge their growth even more. So yeah, that's what I like about Rocket Lab. They're way better than ASTS Space Mobile. I think they're better than LUNR. That is the best like kind of space stock. Uh, I'm looking toward more dividends. I have 10K to spend. What do you recommend? Yo, if you want a higher dividend yield, here's my actually I'll say this. Every stock I own in this account right here pays a dividend. You know, I get it. Like Google and Meta, these are dividend growth companies. You know, you're not buying them for their 0.5% yield. You're buying them for their growth. But I think McDonald's is great. You know, I'm getting a $23 dividend from McDonald's. My highest yielding stock here in my Roth IRA, Main Street Capital. This one pays you a monthly dividend. You get a 5% monthly dividend with this company. And in my opinion, it's completely sustainable. I'm getting paid $2.50 every month from this one, and it grows. So I really like that one. Let's see. FRSH could be good as well. Let's check that one out. FRSH. And Freshworks, how do you feel about HNST? Yo, what up, Harry? We'll check out the Honest Company after this. Yeah. So here's Freshworks, you know, $4.6 billion company. Let's go check them out. I feel like I've heard of this company before, but I don't know what they do. So they have a subscription. Look at that. Actually, this is really good. The subscription revenue is up 20% from the previous year. Look at that. It just hits like a new record every quarter. So I do wonder why the stock has fallen so much. Yeah, they're printing free cash flow. And they're almost net income positive. Wait, that's such great news. Look at that. They're normally losing like 30 million a quarter, but they only lost 1 million. So they need to keep that up. So I like this one. Very strong balance sheet as well. Yeah, I think Fresh could have some more upside potential. So how do you feel about HNSD? So yeah, this is the Honest Company. They just sell like commodities. They sell like healthy diapers and wipes. But they also have no debt. The Honest Company is a debt-free company, so that's another good sign. I want to see them consistently get net income positive because look at the most recent quarter. This is great news. They finally made net income 3 million, and that was real as well. The revenue is up 12%, which is way better growth than the previous year. The revenue used to be only up 3%, so they're bringing back some of the growth. I think they might have gotten like a new CEO a year or two ago. And like I said, strong balance sheet, no net debt on this company. I think they have like 60 million of net cash. And what's the market cap on this company? So yeah, over 10% of the company's market cap on the Honest Company is just their cash on hand. Where can I check WT stock Nvidia? Yo, what do you mean WT there? I can look at Nvidia though after this. Let's see. Oh, FICO. Hey, what up? Pagori has said FICO. So yeah, this is that little FICO score. Whenever you make a big ticket purchase like a car or a house, you know, they charge you a couple dollars for that little FICO score. And they have a lot of pricing power. They've seen a lot of upside since 2019, but the stock's really been hurting recently because the government. There was some news like the government wants to take away. There's like three different scores that people get. They want to take it away just to like simplify it. I don't know. There was some news. I haven't looked too much into it, but yeah, that's like 60% of the business is their scores business, and it's just seen some phenomenal annual growth. So I do like FICO, and they're making a boatload of net income as well, like 200 million a year now. What do you mean? What can I buy tomorrow? Make some money on Moo. Yo, I don't. It's tough to buy anything right now. Like, here's what I have been buying recently, and this is what I bought yesterday. I've been loading the boat on ticker symbol COKE. This is Coca-Cola Consolidated. I think the risk reward looks pretty fair on this one. They trade at 17 times net income. So I do like Coca-Cola Consolidated as my most recent purchase. But if we go back to like the market right here, let's see. Like the QQQ year to date, like it's tough to buy anything with the Qs this high. I mean, we're literally 2% off all-time highs. So you're basically buying at all-time highs. So it is tough to buy, but there are some good deals out there if you can find them. Almost bought a little FICO, too high for me. Oh yeah, hey, I feel you, man. Yeah, it's still probably a little too expensive for FICO. RHP stock. What's this one? RHP. So this is ripe. Oh, yo, what up, Jack? We'll look at TMDX as well. So look, the volume on this is nothing. So yeah, there's no data for this company. I don't know if this is the stock you're talking about. I don't think it is. Yeah, that data is from 20. Yeah, this is from 2021. Yeah, that can't be the stock. I can't find ticker symbol RHP. I do apologize there, Mac. So Jack said TMDX. I've been telling since $64 a share. Oh yeah, dude, I love this company right here. So check out the fundamentals here. Here's what I love about this stock. Look at their liver revenue. I mean, it just hits a new record every quarter. Look at that growth. It's up 62% from the previous year. Also, the heart revenue up 27%, also to a new record. The lung revenue, it's down 29, but that's such a small segment of the business. The liver revenue is the real winner, up 62%. That's 75% of the business. And they're printing net income now. They made 25 million in the most recent quarter. So they're finally profitable. If we zoom out to last year, they were losing 10 million a quarter. So they're finally profitable. I expect this company to pay a dividend one day. I really think they'll pay a dividend. And they're doing stock buyback. So I do like them. Do you short anything? I have no shorts. I don't even have a single option open right now. So I don't really short things. Maybe I'll buy a put, but here's Nike. Someone said Nike. I actually just completely sold out of Nike. I kind of fortunately timed this. I sold all my Nike at 79. We just saw the earnings from Lululemon, like this, the apparel stocks, they just sell a commodity. They just haven't been doing too good, and they're just not keeping up with the market. And here's the bad news about Nike. The revenue is down 9% year over year. So Nike lost the growth. Revenue's down 9, but the net income fell 32. So yeah, if we go to the net margin right here, the margins fell 25%. Very, very sad. So that's why Nike's doing really bad. They actually couldn't even afford the dividend in the most recent quarter. RY Man Hospitality. Oh, wait. Oh, I might have just typed it in wrong. Here we go. RHP, Ryman Hospitality Properties. So this is a REIT, I'm guessing. They're a $6 billion company. Yeah, this got to be a REIT. So let's look at their dividend yield. Yeah, so look at that. You get a 4.65% dividend yield with this company. Very nice. And they're in hospitality. And it's up 8% year over year. Hey, that's good growth. So, yeah, this is a REIT. So they actually have to pay out most of the income they make in the form of a dividend by law. So that 5% dividend is completely sustainable. Yo, Ulysses, good to see you, homie. Are my puts safe tomorrow? Yo, what do you got puts on? General Mills. Yeah, we can look at General Mills here. I love Lucid, not a smart idea, super risky. Yeah, but I got you. I saw Lucid first, and we'll look at Lucid Mills. Yeah, try not to spam. I got you. We'll look at that one after this. So here's Lucid. Here's why I can't personally buy this stock. So first off, they've diluted you 38% year over year. So if you bought the stock exactly a year ago, you own 38% less of the company just from them diluting you. And on top of that, this company loses a boatload of money. They're losing literally in the past year, they've lost over $2 billion. So they lost $2 billion the past year. Well, the whole company is worth $6.5 billion. So that's why this company just keeps on going lower. They're diluting you while the stock's at all-time lows, and they're losing a lot of money. So yeah, me personally, I just stay away from Lucid. Oh, remind me to look at Tempest AI. I really want to look at that one. I might forget because it's going up in the chat. So here's General Mills. This company, they just sell a lot of food products like dough, I think they're in pet food. Let's go see. So yeah, look at this. This is what I love about General Mills, how diversified. They own Cinnamon Toast Crunch. They're in snacks, cereal, convenient meals. Yeah, they're in the pet industry. Dough. They own Pillsbury dough, baking mixes, yogurt, super premium ice cream. Huh. So that's funny they call it that. Super premium ice cream. Maybe they own like Ben and Jerry's or something. I don't know exactly. But hey, I like the diversified revenue stream. Look at this net income they're making. 600 million plus a quarter. Yo, Alex, if you want to get this app I'm using, it's in the link tree in my bio. It's the third link there. It's actually a brokerage. It's called Moomoo. But yeah, General Mills making a lot of net income. I actually really like this one. And you get a great, yeah, this is what I like. A sustainable 4.4% dividend yield, in my opinion. So yeah, General Mills, I love the diversified revenue streams. The valuation's at 12, a commodity multiple. I mean, I know they just sell a commodity, but 12 times PE seems very fair, and I could buy it at that price. Um, Yo, Mac, there's also ticker symbol Rick right here. Now, this is Rick Hospitality. Oh, I wish I could tell you what this company owns. They own, you could probably, yeah, these something clubs or nightclubs, we'll call them. Yeah, so this is a fun company, and they've had, this is an interesting one as well. But how's the nightclubs doing? It's down 2%. Okay, anyway, let's go to the next one. SPY. Yo, what up, Ulysses? Yeah, the S&P 500. Yeah. So S&P 500, great ETF to just buy and hold forever. You should just get 8% of your money back every year with the S&P 500 on average. So, it's market cap weighted. Its top holdings are, Microsoft, Apple, Nvidia, Amazon, Meta, all the great top 500 companies in the US. Relive, what up, dude? Or Relive said JBLU. So I think this is JetBlue. Oh, I want to look at Tempest AI. Spy puts. Oh, okay, Ulysses. Yeah, honestly, I could understand why you're doing that. So here's JetBlue Airways, $1.8 billion company. Unfortunately, this stock is at an all-time low right now. And oh well, there goes the TikTok stream. You know what? Oh well. Oh, I'll just forget about that for now. Yo, if you guys got any stocks in the YouTube chat you want me to look at, let me know. I'll look at all of them. I am gonna end the stream here in like a couple minutes, but I do appreciate. Yeah, here's JetBlue Airways, and I'll do a stock portfolio update. I want to show you all the stocks that I own before I end the stream here. And happy Sunday. Yeah, so check this out. Net income went negative 200 million. Yeah, so here's oh, they actually have a lot of revenue right here. So they're making 2 billion of revenue a quarter, but yeah, they're just losing money on it. They're not consistently making net income, which is the bad news. So I think that's why the stock has just been hurt so much. I think they're diluting you and they're just losing a lot of money right now, more than the market has expected. Last one from my watch list, MCHP. Let's check it out. Yeah, hey, thanks for showing up to the YouTube stream. Don't forget to please drop a like on the video and subscribe if you're new. And check out my most recent YouTube video. I did a whole entire stock portfolio update. So here's, oh, yo, what up, Joseph? We'll look at FPH as well. So here's Microchip Technology. I haven't heard of this company before, just Microchip Technology. So yeah, they're in semiconductor products. So, ooh, this is probably why the stock, ooh, so this is the bad news. They lost all their growth. Look at that. The revenue's down 28%. So, but they have had a really nice recovery. Maybe there was some really good news right here. Like the stock went from 36 and it's at 65 right now. So the stock has nearly doubled since April. So there must have been some good news here. Yeah, that's ooh, they were making a bunch of net income. Look, 600 million a quarter, and now it went negative. And that's real. It really went negative. So that's the bad news about Microchip. I want to see the growth come back there. Oh, what up, Will? Do you think Robinhood is the best investing app to be using? Wait, FPH. It's definitely the most simple. I like this one right here, Moomoo. I mean, honestly, it doesn't matter what brokerage you use to hold your assets because they're safe no matter what brokerage you have it in. But I like Moomoo for all the tools you can do. But I love Robinhood for its simplicity. It's probably best platform to do options. I love Robinhood as well for a Roth IRA. You can't have a Roth IRA with Moomoo. And so I have my Roth IRA here. And look what Robinhood does. They match you. So I've deposited $650 and they've matched me 20. So anyway, let's go look at FPH stock. Haven't heard of this one. Yeah. Oh, very small market cap, 388 million. So they own Great Park. I don't know what that is. Is that like literally a park? I don't know. Engages in, let me read what they do. Combine residential with public amenities. So they might literally just own some parks. This property is located 35 miles northwest of downtown Los Angeles. I'm gonna add them to my watch list. Hey, if you live in LA, you might walk past their park every now and then. I don't know. The Valencia? Anyway, that's really interesting. This seems like a niche company, and they're making net income. Look at that, 60 million the most recent quarter, 120 million the quarter before. That wasn't real. Ooh, so they didn't actually make 60 million in the most recent quarter. They're selling assets, so they sold off 42 million of assets. Huh. So yeah, I got to do more research on them. They do seem very interesting. Oh yeah, what thoughts on Robinhood Gold? Yeah, I have Robinhood Gold. It's worth it if you max out your Roth IRA. Like, um, yeah. So they matched me 3%, which is ooh no, don't want to do that. But they also you earn interest on your cash, so you get a 4% APY on your cash. The IRA match. So yeah, if you keep a lot of cash and deposit to your Roth IRA, then Robinhood Gold is definitely worth it. And yeah, I'll give a quick portfolio update. This is my main taxable account right here. The market is open right now. We're down 0.06%. Nothing crazy. Here are all the stocks that we own in here. Here's my total percent change. So we are up on every single holding in here. And also, if we go down here, the market, SPY's flat, Qs are flat. We also have our Roth IRA, of course. Our Roth IRA is pretty much at an all-time high. Thanks to InnoData right here. This stock has been crushing it. We're up 56% on this company, and we bought them. Yeah, look at them. They're up 37% a month. So InnoData has been crushing it. I love that company. We also have like some of the higher yielding plays like Main Street Capital. And then we have our Moomoo account. Obviously, we've been looking at. This is my buy and hold forever. Once I buy a stock in here, I try and just hold it forever for the long run. Sometimes I'll sell companies, but yeah, like obviously be careful. Don't listen to me. This is a financial advice. You could lose a lot of money on a stock like I did right here. Lost a lot of money on this one. Uh, let's see. I'm moving my shares over to Robinhood and planning on buying gold. I mean, oh, hey, that's, I think they'll even like reimburse you for the transfer fee. Um, that, that's cool. Yeah, Robinhood, I think and they might match you when you transfer in a Roth IRA. I think they give you a match on that as well. So, Data sounds like a made up company from the movie Office Space. Hey, the thing with yeah, that is funny. The thing with Data is I just love looking at the financials and fundamentals of a company. Five of the Magnificent Seven are customers. Meta, Google, Amazon, Nvidia, and Microsoft are all customers of this stock right here. And look at this revenue growth. I mean, it's incredible. It's up 157% from the previous year. That's incredible growth. They're making free cash every quarter. They're making net income every quarter. No net debt on this company. So I really like them for that. Why aren't you prioritizing maxing out the Roth IRA? I know you're right. I honestly, I was just having that conversation with myself. All this next money I'm going to get, I'm just going to put it all into my Roth IRA. Whoa, I've never even, is this a new tab? I've never even clicked this tab right here. This is, I guess, everything you get on Robinhood. Hey, by the way, if you want to get this app called Robinhood, I think if you go to the link tree in the description, it's like the fourth link there, but oh well. I don't even think it's linked. I don't think so. But anyway, yep, that's our Robinhood account and our Roth IRA. And then we have our Webull account, which I haven't gone over yet. So this is our growth portfolio. And we're up 5.37% all time. So we have definitely underperformed the market. We're only up 5.37%. But we have some winners in here like Dave, Disney. We're up 400% on Robinhood. They've been a really good gainer. Oh, yeah, the market's open. Let's see what's up. UiPath. Or here are our losers right here. Look, we're down bad on UiPath, Zoom, Enphase, AMD. And I just like being completely transparent. Hopefully, if you appreciate that, please drop a like on the video for me. And also, if you just want to support me, I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. So only way to support me is just hit the like button and watch my most recent YouTube video. I actually just kind of did a stock portfolio update in depth. So check that out. Go leave a comment. Say you came from the YouTube stream. JEPQ would be a great add to your Roth. Yeah, JEPQ. This is the covered call ETF. So if you're, yeah, this won't. So actually, I'll just say this. If you look in the middle of my screen right here, they have an 11.6% dividend yield. That's a crazy dividend, and they pay you monthly. So you are nearly getting 1% of your money back every quarter in dividends, which is crazy. And it's because they sell calls on the NASDAQ. That's really an asset you'd want to sell calls on because you get a high premium for selling calls on the QQQ. I really like the QQQ, but that could be a good way to generate a lot of passive income. You're right. That's definitely one of the better covered call ETFs. Like I would stay away from like the TSLY. Like this ETF has 140% dividend yield. I mean, that's like it just sounds too good to be true. Like 104% dividend yield. It's their distribution rate. They're actually returning capital to you. The yield max ETFs in particular, I don't love, but I like the JEPI ones, like the JEPI, JEPQ. JEPQ is non-qualified dividends, good for the Roth. Yeah, it's non-qualified dividends because they just pay you the premium they get from the premium they get from the options. So yeah, that would be a good addition. And also my Roth IRA, like I own Main Street Capital. This also pays non-qualified dividends. Actually, so check this out. We just looked at JEPQ. They pay a monthly dividend. This is another monthly paying dividend stock. And here's what's so interesting about this company right here. So look, they pay you 25 cents every month. And sometimes, and they're actually doing this pretty frequently, sometimes they make so much money, they pay you twice in 1 month. Like right here in between these two 25-cent payments, they paid you just an extra 30, oops, they paid you an extra 30 cents just for owning the company. So they pay out these special dividends and they can easily afford that. Main Street Capital's quarterly dividend costs 75 cents. So their dividend costs 75 cents a quarter. And look at the EPS every quarter. It's well over 75 cents. Last quarter it was $2. So they could easily afford the dividend, and that's how they're able to do the special dividends. And they also are just trading at 9 times net income. But yeah, this is one of my more favorite higher yielding stocks. 5.3% dividend, not including the special dividends on that company. So yeah. And my other stock I own in there is BRX. This is Brixmor Property Group. This company owns triple net leases on grocery stores. So their top tenants are actually Publix, Kroger, TJX, Ross, Dress for Less, those kind of mostly grocery stores. And they have a 4.5% dividend. So this is the other higher yielding dividend play that I like. So yeah, if we go over to my Roth IRA on 10 shares of BRX, that's Brixmor. Hey Jesse, good to see you, man. What's up? Nice last video you posted. Hey, I appreciate you. Yeah, we just did a whole entire stock portfolio update in my most recent YouTube video. Hey, I'm about to end the stream here. Jesse, if you got a stock you want me to look at, let me know right now in the chat. Or if anyone else, you got any last minute stocks you want me to look at, let me know. Oh, and I forgot, I didn't even see this. My bad. Baby said also SCHD versus QQQM. Yeah, these are basically the exact same thing. So yeah, I like QQQM. What's the expense ratio on this one? I'm pretty sure they have like the same expense ratio. This one might have a slightly lower expense ratio, but yeah, it's the same strategy, same NASDAQ 100 strategy. I believe their top holdings are, Microsoft. Actually, no, this is not the NASDAQ 100 because Costco's in there. Oh, so this is the large cap growth ETF. So this isn't the QQQ, but it's performed similarly. 10% in Microsoft, 10% in Nvidia. And look, the third largest is actually Apple. That's because this is a market cap weighted ETF. I think Apple is now the third largest company. Let me actually go check that. So yeah, look at that. Microsoft is worth 3.5 trillion. Nvidia is almost there. They're worth 3.46 trillion. Then Apple's only worth 3 trillion right there. Then Google, Meta, they're almost at 2 trill. Tesla's under a trill. Oh, here we go. What up, Joseph? He said CXM stock. Let's see. CXM. So this is Sprinkler, huh? Sprinkler stock, $2.2 billion company. Let's see. They're trading at 22 times net income. So that means they're making net income. That's great news, actually. So revenue, 200 mil a quarter. Yeah, they are making net income. It is a little choppy, but overall good. It's just nothing's really blowing me away here. I mean, what was the revenue growth on this company? Let me go check that. So revenue is up 5% year over year. I mean, yeah, they're not growing that much. That's probably why the stock just hasn't done too good. The stock is pretty close to an all-time low. You keep any of your money in like a high yield account, or does everything else you go? Yeah, actually, my main bank account, it's a checking account. It doesn't earn any interest. So whenever I get like a lot of cash, I'll move it into Moomoo right here. Check this out. If you look at the middle of my screen right here, I have $1,000 of cash on hand, and it gets me a 4.10% APY. Pays me every week the interest. It shows me the daily interest, but it pays you once a week. So yeah, I really like Moomoo just to hold my cash in here, but also Robinhood. I pay for Robinhood Gold. I just use Moomoo's because it has a slightly higher yield, but with Robinhood, I get a 4% APY on my cash in here as well, which my bank doesn't offer. So yeah, actually I use Regions Bank. I use ticker symbol RF for my bank account, Regions Financial. and they're a bank stock. What's their yield? I think they had a high yield. Wow, 4.5% dividend yield on Regions. How much net income are they making? Wow, yeah, 500 million in net income a quarter. So hey, Regions has actually been doing pretty good. Yeah, I just like to keep my cash in Moomoo. Yeah, if you want to get the app Moomoo, I think if you go to the link tree in my description, it's the third link there. But anyway, hope oh wait, here we go. Um, what state are you? Hey, I'm in like the south of America. Uh, I Anyway, I appreciate y'all. Hope y'all have a great rest of your Sunday. I'm gonna go. Fortunately, TikTok took down both of my TikTok streams. I don't believe it. So anyway, if you want to help me out, go check out my most recent YouTube video. I stream every day, by the way. So I'm gonna be streaming next Sunday at this exact same time. I like to do like what stocks to buy this week every Sunday. So come back next Sunday. I appreciate you. If you want to hit the subscribe button, turn on notifications, it helped me out, and hit the like button on the stream. That helped me out too. And yeah, I'll see you guys in the next one. Yeah, free me. TikTok just does not like me. TN here. Ascend Bank offers 3.56 for up to 15K. That's still not great, Mac, huh? That is weird. You seem like South Carolina. Actually, I am very close to that state. Anyway, I'll see y'all later. Have a great weekend. Yeah, see y'all. Thanks again for showing up to the YouTube stream. I can't believe TikTok. I mean, I don't believe it. Thank you, Mac. Thank you, Joseph, Jesse, Baby, It's Will,